The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Tuesday morning to everybody out there. My name's Kate Stalter. This is the Small Cap Roundup. And I put up there on the on Tiger TV, I put up a daily chart of the NASDAQ composite. I noticed somebody was joking around a little bit in the Tiger Den about some of the financial networks starting to put up the NASDAQ 3000 watch, same as we've had that Dow 13,000 watch. So yes, that is indeed happening. The financial networks are on the alert for that. We have the major indices rallying higher today, despite the S&P temporarily, let's see, there was actually the ECB temporarily suspended Greek sovereign debt as collateral, and then S&P did issue a change in its rating of that, calling it a default of some sort. I forget exactly the terminology that they did use, but there were some changes in that. So some bad news out of Europe, but you did see the European stocks rallying ahead of this third round of funding that's anticipated to happen tomorrow. We had some bad housing price numbers from the Case-Shiller index this morning, contracting credit in the European economy, higher gas prices at the pump. We're all seeing that right here at home, the threat of some pretty ugly action potentially between Israel and Iran, and in the face of all that, I saw a tweet this morning from ETF Digest editor Dave Fry. And we had Dave as a guest on the show a few weeks ago. He's a terrific ETF analyst, and he retweeted this himself, actually, from the blog Zero Hedge. And here's the quote: "Market ignores everything, fixates on promises of more QE from Bernanke during Humphrey Hawkins tomorrow." And, of course, that's a reference to Bernanke's testimony before Congress this week. So I thought that quote was pretty interesting. Something else I was noticing this morning, a column on Market Watch by a very bright hedge fund manager named Kevin Marder. And I've spoken with Kevin in the past. Kevin typically invests in not really the small caps we talk about on this show or that we'll be talking about in the upcoming newsletter. Kevin typically invests in what he calls the liquid glamours. I like that name, the liquid, big cap, high-profile growth names. Apple, of course, is a perennial on that list. Alexion Pharmaceuticals is a current name. Starbucks would be another example. Another thing I like, before I tell you about Kevin's quote here, another thing I like about his investing style, he puts clients also, in addition to these liquid glamour names, as he calls them, into some dividend-paying utilities and some other dividend payers to create some income in a portfolio. I know a few months back when we talked, he was very keen on some of these pipeline and infrastructure energy infrastructure MLPs, and those have become very popular, and that's a strategy that I also endorse. And today's article that Kevin wrote got my attention because it was titled, check this out, "Keynes Had It Right About the Markets." So that title right away kind of made my head spin, and I was very curious to see what he meant. And here's a quote that kind of sums it up. "With the NASDAQ up about 18% in 10 weeks to rest on a perch loftier than any other since the days of December 2000, how much farther does this rally have to go? Operating on Keynes's premise that, quote, it is better to be roughly right than precisely wrong, i.e. the advantages to being a trend follower outweigh the negatives, it is preferable to let the market tell its own story." Close quote. I love that. That really just caught my attention because that sums up the philosophy that we do talk about here on the Small Cap Roundup, following the market's trends. Kevin goes on to point out that some of the strengths in the current market, and of course, there is plenty of speculation about a top being near, and that's part of the reason I think that we do have a little fun joking around about what the financial channels could be doing with some of this NASDAQ 3000 or Dow 13,000. there's plenty of speculation about a top being near, and then the upside action that's actually occurring then becomes doubted. And that's easy to do. I started the show today by pointing out all the worries the market's facing, and all the while, stocks continue to climb higher. So you had heavier upside volume. Let's take a look at some of the positives. Let's see. You did have couple heavier upside volume sessions back here recently, back last week. And then let's see, here we have, that's today. Then on Monday, there we go. Monday's session, I'm pointing that out on Tiger TV, had some heavier upside volume than Friday's session. So there were actually some technical reasons to believe that there actually are some positives taking place on the major indexes. You had some selling back in January, let's see, way back here actually. Okay, January 26th, January 30th. You had a heavy volume selling day on the NASDAQ back here on January 26th. But notice the nice gain that the NASDAQ has seen since that day. So the more recent action takes precedence over some selling that occurred more than a month ago. So a lot of opinions out there about toppy markets, but the indexes are telling us something different. You just can't really ever get enough reminders just to follow the market's trends and not give in to either some pundit's opinion or even your own opinion, because our own opinions can very easily steer us wrong when we think we know what's about to happen. So let's see. Later in the show today, we have an outstanding guest. And if you're a listener to this show, you know that I do like to bring on some of the mutual fund managers, other asset managers, and market analysts. Today we have Eric Marshall. He's the co-manager of the Hodges Small Cap Fund, and the ticker on that is HDPSX. I'm going to go ahead and put that in the den right now. HDPSX. We'll be talking to Eric a little bit later on today. And, you know, one of the things that is so interesting, just a constant reminder when we do talk to the fund managers, it's almost uncanny. If I happen to be asking any of them about some of the technicals, they do take note, but they don't typically make their entry decisions based on the technicals the way individual investors really can. That's a luxury we have. We don't have to sit through these ridiculous price corrections the way that some of the big funds that have to be fully invested are mandated to do. We can watch the price action in individual stocks in the market indexes themselves and make our determinations of when is the best point to buy and sell a stock or to add to an existing position. So we do have some advantages that the funds don't, but the great point about hearing what these guys have to say is they are doing all this fundamental analysis. They're studying the companies. They understand what the potential is. A lot of them, they are the buyers who jump in there at these lower price points, propel a stock higher after it's reached some kind of intermediate low. So we really can track what they're doing, and we have the advantage of being able to follow in their footsteps. So let's look at some action in some specific small cap and low price stocks today. Oh, and before I do that, let me give out the phone number. Please call in. I definitely enjoy hearing from the listeners with your small cap questions. 877-927-6648. If there's a stock you're looking at that you're thinking about, give a call. Be happy to put the chart up and we can talk about it. So let me put up a chart right now. Let's see here. Let me get I want to look at InvenSense. INVN would be the ticker on this particular name, and I want to put it up. Well, I'll put it up there on a daily for you to see. Now, this is a stock you notice has been previously, prior to actually about a couple weeks ago, Valentine's Day. That's the day I was in the office there in Clearwater. And actually, it was the next session, February 15th, that the stock really did tank, plunging below its short term, the 10-day average right there. So you do see here that the stock gapped down yesterday, but prior to that had a nice run up. It lost about 6% yesterday, and notice the volume. Big volume on the decline. Also, back here on that February 15th decline, you had some enormous volume as the stock fell on that day. Now, it did finish above session lows, but is trading lower again today. It did announce that it was offering some new shares. That often disappoints existing investors because of the dilution issues. So you get a little selling temper tantrum that occurs, and that's what happened here. Now, this is a very new public company, and I'm going to put up a weekly chart. It'll look a little bit funky because it's so new. There, let's see. There we go. I can give you a little better view of that. So this is a new company. It offered a buy opportunity kind of back in here, but could be forming a new consolidation right now. You notice it's still holding above that 10-week line. You can tell that a little bit better up here on the weekly chart that it is holding above that 10-week line. Could offer a new buy opportunity before long, and that's what I often say, is that some of these sharp pullbacks, particularly in the younger, newer companies, the smaller caps, they can be pretty severe, but they can also offer a new entry point if you're just patient through that consolidation. And once again, that's the kind of thing we don't necessarily have to hold through, that an institutional manager might choose to do that. Now, another thing to watch here, though, and I talk about this a lot, at this 10-week average, that is a point where you often see the professional money managers who own a stock will come in and buy some more shares to support their existing position. They have confidence in the stock, in the company itself, and they want to come in there and buy some more shares at a lower price. We talked a little bit about that with one of the managers we had on the air a few weeks ago. I believe it was Tim Holland from Tamro. He made that very point that he will go in there and purchase more shares as a stock he owns that continues to have strong fundamentals and good company potential. As it dips, he will buy on the dip. That's often what results in that 10-week support, offering individual investors and traders a place to pick up some shares. Okay. Let's take a look at another one here. This is OSI Systems. I'm putting this up if I can get the ticker right there. OSIS is the ticker. This is OSI Systems. And there we go. There's a little better view of it for you there at Tiger TV. You could see the 10-week support happening on this particular stock as well. It makes medical equipment for monitoring patients, and also kind of an interesting product mix, some technology gear for the defense and aerospace industries. Now, the stock bolted. Let me put this back here on a daily chart to show you there. You see a nice big move that this stock made on Monday. And it won a contract with Mexico's Tax and Customs Authority. So there had been some good chart action prior to this. Is it too late to buy? Well, let's take a look. Let's keep it here on the daily chart, and we could take a look and see what's happening here. It did clear a consolidation, although that was actually right back in here. You did see a little bit of lower volume as that happened. Then it pulled back again. So these new lows that it formed over here could actually be constructive. I do kind of like that. All right. The music is telling me that it's about time to take a break here. This show always goes fast. I'm Kate Stalter. This is the Small Cap Roundup. We'll be right back in just a few minutes.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, back with this next segment here on the Small Cap Roundup. I wanted to continue looking at OSI Systems because this is a pretty interesting stock, and I want to make a couple points about this. So let's see. This has a market cap a little bit shy of $1.2 billion. On the thinly traded side, moves about 100,000 shares a day. So you do see right in here, you had some heavy volume as it was moving out of its most recent consolidation after these lows back early October, like October 4th. A lot of stocks bottomed out along with the market that day, began rallying higher. So you had some heavy volume, and I'm showing this in Tiger TV right now for those of you who are watching. And then you had volume tapered off a bit as it rallied higher. So it cleared, let's see, its prior high back here was 45.28. So it cleared that high back in November. And unfortunately, volume was a little bit tepid as that occurred. And as frequently happens, you do see stocks will clear previous technical buy points, and it's not uncommon for them to pull back right after that. And maybe about almost 50% of the time, in fact, that can occur. So this did, in fact, pull back. Nice action, though. Found support at the 10-week line, just showing that it needed to have a little more flushing out of some of these traders and investors with a little less conviction. Then it began to rally again. Now, you did have, again, tepid volume as it rallied higher, made some new highs here. And if you recall, there's been a lot of consternation about lower volume as the broader markets have been rallying higher, and we've seen that reflected in a lot of individual stocks as well. So this one did rally to a high back here in late January, pulled back, once again found 10-week support, and then you have this week's action here. And if I go back to a daily chart, and then you do see the monster volume on the daily chart, and I'm going to go back to a weekly and show you something. I mean, of course, it's only Tuesday and only really the early part of Tuesday's session, so that's why the weekly volume still only appears maybe average or slightly below average on here, but that should pick up and reflect heavier volume for the week. So is this stock buyable right now? Well, actually, yeah, this is right now about 5% above that previous high price right over here before it pulled back, its previous high before it pulled back and found 10-week support. It's about 5% above that. It still is in buy range in my view. You don't want to chase it too much higher than that. And don't be surprised if you do see another little pullback just coming after this. You might have a cushion in the stock at that point, though. And even so, it could be something, if it doesn't fall, maybe more than about, let's see, 5, 6 or so % below that previous buy point. It could be something that you'd want to just kind of sit through a small consolidation on that one. So this has been a very solid technical performer. One other thing I want to show you that I consider to be bullish on this particular chart. You notice the lows right in here, and particularly the October low, although it had fallen low prior to that, undercut the low of the previous consolidation. Okay, so once again, and I think I've talked about this a little already today, that action of really flushing out some of the investors, the traders, the institutional holders who are lacking in conviction on this particular stock, setting the stage for some of these new value buyers to come in. And that does happen time and time again. Let me show you a company that is reporting earnings later today. Now, this is actually not technically a small cap, but it is a low-priced stock. This is Kodiak Oil and Gas. KOG is the ticker. It's trading right now at about $10.58. Now, the company reports earnings after the close. It's an oil and gas explorer. The bulk of its reserves are in oil, about 13% in natural gas. Nice chart on this one as well. It pulled back right in here and is possibly forming another little consolidation after clearing this most recent bigger consolidation, maybe just more or less taking a little breather right in here. Now, typically, I like to be very cautious ahead of earnings. So if I owned this particular stock, and I do not, but if this were a name in my portfolio, I probably would have pared back the position ahead of this afternoon's earnings report. In this case, I would not take the entirety off the table since it's been trading in a pretty stable fashion recently and showing some very bullish technical action, but I would cut back just to err on the side of caution. Okay, another segment that just flew by. Stick around and give a call. 877-927-6648. We're going to be talking with fund manager Eric Marshall in the next segment of the show. I'm Kate Stalter. This is the Small Cap Roundup.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, everybody, welcome back to the Small Cap Roundup. I'm Kate Stalter. This is pretty much, I would have to say, my favorite segment of the show here, where I do get to interview some of today's best small cap fund managers and analysts. And today we have a special guest, a gentleman I've spoken with before for Money Show, Eric Marshall. He's the co-manager of the Hodges Small Cap Fund. And for those of you playing along at home, the ticker there is HDPSX. And I'm going to put that in the Tiger Den right now. HDPSX is the fund that we're going to be talking about. Now, Eric, welcome to the show. Glad to have you on today.
Well, thanks for having me.
Now, I noticed that I always do pull up the data for the Morningstar data for funds, and I see that you do have an excellent record of returns over the past 3 years. Now, is this fund kind of on the newer side? I don't think we talked about that before. How old is this fund?
Well, we have been in the mutual fund business since 1992, but we launched our small cap fund in 2007. So it was an interesting time right before, the top of the market. We launched this small cap fund, and which was very interesting in the timing and posed some real challenges to us over the last 4 years. But we're glad to look back on it and see that we survived it and did actually pretty well in the face of some real challenges out there in the market.
Right. And as I mentioned, I did see the record there on Morningstar that did look pretty good for the past 3 years. Now, talk a little about your investment philosophy.
Yeah, I think one of the reasons why we were able to do relatively well over the last few years is our emphasis on individual stock selection. In the small cap universe especially, we believe that, companies are not perfectly efficient, and by going out and really understanding what's going on in the underlying businesses that we're investing in, we can really find opportunities where there may be a disconnect with what the real value of the company's assets are worth and where the stock is trading at today. And this involves, we have a whole team of analysts that go out and we actually, meet with companies and, visit their headquarters, talk to their management teams, really study the business. But this also means going out, talking to their customers, their suppliers in some cases, maybe go talk to some competitors and size up all of the, competitive landscape of what the company is doing, look at the valuation relative to, what the underlying assets of the company are worth. And oftentimes we can find things in the small cap universe that the broader market overlooks just because smaller companies are, they're off the radar of a lot of the larger Wall Street firms, and you just don't have as many analysts focused on following them because the big brokerage firms don't make as much money off of investment banking and trading off of smaller cap companies.
You just underscored a point that I make quite a bit on this show, which is the fact that for retail investors who are buying into individual small caps in addition to a fund, we can really follow in your footsteps because we can watch the institutional buying in these smaller stocks. And if we're following the technicals, as I do, we can find good technical buy points based on what you're doing. So that's really interesting to hear, your philosophy or your approach there, Eric.
Yeah, oftentimes, we don't spend a lot of time picking stocks based on technicals, but the technicals do oftentimes signal when there is a fundamental change occurring. Mm-hmm. And oftentimes that will be a signal to go out and do some fundamental research.
Oh, that's a great point. I'm glad you said that because obviously that is true. You do see a lot of these changes on the charts, and it's just very interesting to see the interplay here between what the institutional managers like yourself will do and what a retail investor should do. So let's talk a little bit then about maybe sectors that you like right now. I noticed on Morningstar you were pretty heavily weighted in, I believe it was in the consumer area. Tell us a little bit about that.
Yeah, that's an area that we've done real well in the last couple of years. It's actually been an area where we've actually shrunk our exposure probably over the last 3 or 4 months just because we were overweighted in 2010 and 2011. We still have a healthy dose of exposure there. Most of the companies that we own are things where, they're very unique situations like AT Cross, the old 160-year-old Cross Pen Company. They also have a hot premium sunglass brand called Costa. They have another one called Native. And there's actually a very nice growth component to this old business.
Eric, what's the ticker on that? I'm going to put the chart up while you're speaking. ATX. Okay.
ATX.
Great.
Anyways, that's one where there's a really unique growth story underlying a value company. So that's something that's unique within the consumer space. We also own Joseph A. Banks, the men's clothing retailer, Hibbett Sporting Goods, Monroe Muffler, MNO, and Group 1 Automotive. This is a company that owns new car dealerships over multiple brands, everything from Toyota, GM, Ford, Honda, Nissan. And there's somewhat of an upgrade cycle underway for new car sales.
What's the ticker on that one? I'm sorry.
That one is GPI, Group 1 Automotive.
Okay.
But those are some examples of things that we're doing in the consumer. There's always opportunities in the consumer area if you really dig down and find out what the trends are, what the cycles are, And even in a difficult environment such as the recession that we saw, Joseph A. Banks had positive same-store sales because they were out grabbing market share from department stores, providing inventory at a time when most retailers were not carrying as much inventory, being very promotional in the way that they advertise and promote their product. So there's always opportunities, even in a slow growth economy like we have right now, within these small cap companies, because smaller companies tend to have the ability to have more, they're more agile and they tend to be more flexible in what they're able to do with their businesses. And smaller companies can oftentimes grab market share even in a slower economy.
Talk a little in addition to sectors, because I think that's pretty interesting about the consumer. I'd like to hear about some more of the sectors that you're invested in, but I'm also curious. Yeah,
we continue like energy. There's a lot of opportunities there, both on the some of the E&P companies and the service side. For example, we own a company called CJS Energy Services. CJES is the symbol on that company. This company went public here not that long ago, but they're one of the leading providers of fracking services to the oil and gas industry. The company has a very clean balance sheet, trades at a low P multiple, and we think, regardless of, what happens, day to day and the fluctuation of energy prices, we think this company can do very well over the next several years. And we also like kind of a unique idea, Texas Pacific Land Trust. TPL is the symbol. This is one of the oldest traded stocks on the New York Stock Exchange, actually. But they own, in addition to oil and gas royalties across 16 different counties in West Texas, they also own the surface acres. And for every share, you get roughly a tenth of an acre per share. And so the stock's trading around 45. So it's equivalent of buying land at $450 an acre out in West Texas. Plus you're getting royalties off of, partial royalties off of that land, as well as easement income. And we think the value of that land is worth a lot more than that. But there's only 10 million shares out. The stock's, not widely held by a lot of institutional investors. Most people don't know about it because there's, not a lot of, investment banking activity and stuff like that. It's kind of a quiet company that's flying underneath the radar. But those are some examples of, things that we're doing in energy. We've stayed out of financials for the last few years. We've started to tiptoe our way into the water there, and we bought a few of the regional banks. One of them is Texas Capital Bank Shares, TCBI, and Viewpoint, VPFG. And that's a company that used to be a savings and loan that they've converted over to a bank holding company. Longer term, we think that there's a big growth opportunity in the markets that they serve, and also see them as an acquisition candidate 2 or 3 years down the road.
Yeah, it's interesting what you were just saying, and you've made the point a couple times today, Eric, about the fact that some of these companies, they're not going to Wall Street for additional capital, they're not raising debt capital, they're not issuing more shares, so they really just are off the radar screen. And that is pretty interesting because there is a lot of opportunity, I believe, and I know you do too, among some of these stocks that are just not household names.
Yeah, and one thing also, especially in the small cap universe, one thing that we're finding is a lot of the companies that have been able to have low debt levels and really do a good job of managing their businesses during the downturn are actually doing much better coming out of in the recovery that we're in right now, because there are fewer competitors out there. Within the home building space, we own a company that's one of the second largest building wire suppliers in the United States, Encore Wire, symbol WIRE. And this company is doing extremely well right now because a lot of building wire capacity left the market during the downturn in housing, especially the higher cost, less efficient operators went out of business, shut down capacity, consolidated. So the stronger companies that have survived are really positioned to do very well.
Do you factor dividends into your model at all, Eric? Now, I know that this one has a very small yield right now. I'm just looking at it, about 0.3%, really nothing to write home about there. But is that something that you factor in at all?
We definitely look at that, and we own a few things that have some dividend yield to them. What we find in a lot of cases, usually smaller cap companies are usually reinvesting their earnings in growth opportunities. Once a company gets to a certain size where they really can't grow the business as fast, it's oftentimes better for them to pay out those retained earnings in the form of a dividend, rather because they don't have the opportunities to reinvest it in their own business at a high rate of return. So one of the things that we look at companies, smaller companies that are able to grow into big companies and have internal cash flow to do that. We like to look for companies that aren't necessarily dependent on going to capital markets or borrowing money to grow their business. We like to find companies like an Encore Wire that's generating a lot of cash flow, and they're able to, add capacity, grow their business all through internal means. And so those companies tend to pay smaller dividends.
Right. Makes a lot of sense. Now, we've got just a couple minutes left. So really briefly, I wanted to ask you just about global investing. Are you more domestically focused, or do you have any global holdings?
We have a handful of things that are Canadian-based and based outside the U.S., but the majority of our focus is really inside the U.S. because, like I said, we like to do a lot of bottoms-up research. We like to really get to know the people that are running the businesses that we're investing in. And we are actually, believe it or not, finding opportunities to take part in international growth through some of these small-cap domestic companies. And that's something that a lot of investors overlook. Most people think, if I want to be a multi-international investor, I got to go buy Coca-Cola and IBM and McDonald's because they have operations all over the world. But you'd be surprised, companies like the Fossil, the watch company, over half of their business is outside the U.S. A.T. Cross that I mentioned earlier, half of their pen business is outside the United States. We own Cinemark, the movie theater chain. They have now about a third of their business is in Central America, where going to the movies is kind of a new phenomenon for the emerging middle class in Central and South America. So, you can find ways to invest internationally in small cap companies without having to leave the safety of the U.S.
Eric, this has been fantastic. I've really enjoyed speaking with you, learned a lot today, and please come back and join us some other time.
All right. Well, thanks for having me.
All right. This is the Small Cap Roundup. We'll be right back after these messages.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry, or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back for our final segment on today's Small Cap Roundup. What great insights today from Eric Marshall. Really just great to talk to him. A lot of terrific information and a window into how the institutions view their purchases, how they make their decisions. I really always enjoy hearing that. We as individuals can completely benefit from that without having to adopt the same approaches that they use. We're very fortunate in that sense. Now, somebody in the Tiger Den put up CHKR as a ticker, and that's a Chesapeake. It's an oil and gas royalty trust. It actually, that is having a nice run there. It just went public back in November, and looks like it's rallying to some new highs today. Now, this one is one of those, the way these royalty trusts are structured. Huge dividend yield on this one, about 10.5%, and some nice earnings estimates, $3.14 a share expected this year. So nice growth over 2011. It earned $1.24 a share in 2011, so nice bump up expected this year. So yeah, this is an interesting chart right here. Market cap of about 600, a little bit shy of 650 million. It looks like. So yeah, that's an interesting one. I'd actually been watching that. I wasn't necessarily going to talk about that today. And let's see, somebody's writing here. It goes ex-dividend next week. Okay, good to know. Thank you. It's JC Boulder. Okay, good to know. And I'm wondering if JC is sitting there in the mountain time zone with me here. If you're in Boulder, Colorado. Okay, there's my buddy Steve, FNSR. I know this one. Yeah, Finisar. So let me see. I'm going to pull up some fundamentals here on Finisar for just a moment, Steve, up here on MSN. Yeah, so this is market cap of about $2 billion. It's got some decent liquidity on this one. Now, the one thing you might know what. Let's see here. What I'm going to say. Let me get, there you go. Give that a longer view. That's what I wanted. So you see here, it's still pretty far off that high back there from a year ago, although this recent consolidation here does look pretty bullish. Here's something I like right there. I'm indicating it on Tiger TV, where you have that shorter 10-week moving average crossing above the longer-term moving average. That is often a precursor to some further gains. So liking how that one looks right now. Now, this one is supposed to, the fundamental performance not so great recently, and that's pretty much expected to turn around pretty soon, but result in a year-over-year decline in earnings in 2012. We're going to see a rebound in earnings, according to what Wall Street believes, in 2013. So the future does look pretty bright, and this is a network gear maker. You know, this has been a growth stock in the past. It did, as you see, obviously, it's been suffering through some tough times here. The technicals could be turning around on this particular name. I do like what we're seeing right here, and for more aggressive investors, you might want to wait and see, let's see, when it retakes this high price over here of about $23.48. So you'd like to see it retake that level, preferably in heavier volume. Good sign here. You do see last week, as the stock was consolidating a little bit, that volume was lighter. So that's a good sign. But I do like this cross action right here we're seeing with the 10-week line crossing above that longer-term 40-week line. Often a precursor of some good things ahead for the stock. And Steve is telling me that one reports tomorrow. I thought I had noticed that. I was putting together a list for what I do over at thestreet.com, realmoney.com, and I thought I had seen that one on the list. So thanks for reminding me, Steve. Okay. That's our music. There's Tom Petty ushering us out for the day. Great to be spending Tuesday morning with you. See, I don't know what day it is. Great to be spending Tuesday morning with you. I will be back here again on Thursday for the Small Cap Roundup. Thanks so much. Bye-bye.